Welcome, trader. This is Steven with TMT. No pain, all gain. Now let's trade some knowledge. Up and down, the only two directions stock price can move over time. Like a roller coaster, the price swings can be subtle or extreme. In order to capture these price movements, a number of different chart types have been developed. The most commonly used chart type is referred to as candle or candlesticks. This simple chart type is able to describe the open, close, high, and low prices experienced over a period of time. The period of time can be as short as 1 minute or as long as a month. With enough time, these candlesticks group together to form the chart and patterns traders use to conduct technical analysis. But let's dissect the candlestick a little bit further. Let's assume we're measuring a stock's price over the course of a typical trading day. Our candlestick starts at the opening price. The opening price is the quoted market price when the stock market opens. For the New York Stock Exchange and the Nasdaq, that is 9:30 a.m. Eastern Time. After the open, trading will commence throughout the day. The stock will fluctuate between a low price and a high price, until eventually the stock trading day comes to an end and the stock market closes. For the New York Stock Exchange and the Nasdaq, that time is 4 p.m. Eastern Time. The stock's price at the time of the market closing is known as the closing price. To recap, this single candlestick describes the opening price, the low and high price it experienced throughout the day, and finally, its closing price. But does the color of the candlestick mean anything? The color, usually green or red by default, depends on the opening price and the closing price. If the closing price is greater than the opening price, the color will be green. Or if the closing price is less than the opening price, the color will be red. Or if the closing price happens to be equal to the opening price, there won't be any color, just a line. Although a single candlestick can shed some light on the stock's performance over a given time frame, a series of candlesticks can paint an entire picture. Candlesticks can create recognizable patterns that traders take as bullish or bearish indicators. Some of these patterns are praised to the point that they were given names. For example, a series of 3 major upticks is called the Three Wise Men and is seen as a strong bullish indicator. Being able to read candlesticks is the first step to becoming a technical analyst and just one of the many skills to acquire on your path to becoming the modern trader.